Hello everyone, thank you for checking out my video. We have come to the end of first half of 2023 with Nasdaq hitting its biggest first half gain since 1983 and Apple went past 3 trillion market cap. To make things even better, cooler PCE inflation data and resilient economy have brought lots of optimism to investors. So, is the uptrend gonna resume after we had that pullback about 1.5 weeks ago? Where is this bull trend leading us to next? And for curious viewers out there, I will be sharing the stocks that I bought last week as well as the profits of my option trades for the first half of the year, so do watch till the end, alright? Okay, the US stock market has rallied through 2023 largely because it has defied odds and predictions that the country will go into a recession. At the moment, the economy remains resilient, labor market remains strong, inflation is cooling, and companies' profits haven't fallen as much as we all feared. And not to forget, all these are happening in a high interest rate environment, which makes it even more amazing. I mean, you just think back to the end of last year, there was so much pessimism for both US economy and companies' profits, and it seems like all this have proven to be noises, at least so far. Well, a quick sum up of first half of 2023 is that most of the very beaten down tech and growth stocks had made a massive comeback on the promise of artificial intelligence being our future, as well as an end to the Federal Reserve aggressive rate hike campaign. Okay, so for second half of the year, what should we look out for? Well, one common criticism of the current market rally is that it has been too narrow and too focused on a few mega cap tech stocks, or the so-called Magnificent Seven. Therefore, later half of this year, we would want to see more participation from other stocks and sectors. Actually, the rally has broadened out a little with smaller stocks starting to rise as well. Russell 2000 index has clinched 5 straight days of gains and its longest winning streak since 3rd of March this year. So yup, we need to see much more of this to give us a chance of a multi-year bull run. But of course, barring any black swan events. Technical wise, I would expect volatility in the second half of the year. I mean, what's new, right? We are talking about the stock market. But I still want to cover it here because there are still newer investors who may get a little panicky when mega cap stocks go down 3 to 5% in one day. Anyway, I am also expecting some form of profit taking from institutions, which means slight pullbacks again. Also, at a certain period of second half of this year, there should be some sideways actions as stocks consolidate, which is pretty common, so don't expect the stock market keep having the parabolic run that we have seen in the first half of 2023. Finally, short-term wise, for this particular week, the US stock market will be open half a day on Monday and close on Tuesday for Independence Day. Okay, moving over to the technical segment, and as usual, let's begin things off with SPY. If you have no time to watch this segment, just one summarized liner for you. For the next half of the year, as long as SPY stays above 420, any form of pullback is healthy, at least in my opinion. If it dips below 420, then we will discuss further on a possible trend reversal. So yep, otherwise I think the market is still bullish at the moment. As you can see from the chart, we had the pullback that we all have been waiting for, but SPY recovered very quickly to hit the recent high of 443 again. Coincidentally, it closed right at this level. Come this week, it's a very short week, so I would urge investors or traders to exercise caution as the liquidity and volume could be a little low and hence the trend could be uncertain. Nevertheless, two key things to watch for the bulls. First, watch if SPY can break above 443 and closes above it for say 2 days. Then watch whether the MACD crosses to the upside. When these two happens, it could possibly open the gateway to 450's range, with resistance at around 452. This is where the high of March 2022 sits, and also where the top end of the uptrend channel is. Above this level, keep an eye on 460. That's the level where SPY was testing from November 2021 to January 2022, before we started falling and entered a bear market. Therefore, if SPY can clinch this important 460 level, I think we can expect it to test the all-time high at 468.7. Personally, I think it's super unlikely to happen this week. The key to whether we can unlock a new all-time high lies with the earnings season, in my opinion. On the downside, if SPY gets rejected at resistance level of 452, 443 should act as a support. What I personally don't like about last Friday's rally was this gap up. So if 443 breaks, that gap between 438 and 441 should be filled quite easily. And if you were to zoom out the chart, you will realize that since March this year, the 20 moving average has been a decent support, though there were a few occasions where SPY broke below it, but it reclaimed this level quite quickly. Therefore, in my view, this should continue to act as a support. A stronger and more critical support is at the magical level of 420, and coincidentally, that is where the current 50 moving average sits as well. Moving over to Apple, Apple doesn't seem want to take a break at the moment. Okay, if you have followed my last video, you will know that I shared that we can expect Apple to test 187.5, and if we get good volume with about 2 green candles above it, then the bullish momentum will continue, and the next target will be 195. Ladies and gentlemen, we hit 194.4. Almost there. Can I have a like button for this technical analysis, please? Anyway, last week when I was looking at the chart, I can't even see the 195 Fibonacci extension level. Now I can see it. What is not shown here is the 150% Fibonacci extension level, and lo and behold is the magical 200 level. Again, it's quite straightforward this week. Just like last week, expect Apple to test 195, and again, if we can get about 2 green candles above 195, well, 200, here we come. But here's the but, just like SPY, I don't quite like the gap up that was created last Friday. So come this short week, if investors decide to take profit, we could fill the gap quite easily, which is around 190 to 191. To me, as long as 187.5 support level holds, we could just chop around between the two Fibonacci extension levels before pushing higher towards 200. However, if 187.5 breaks and we get solid volume with a few red candles below it, it may trigger some temporary sell-off. Personally, I will only be excited if bears can bring it down to the gap at around 175 to 176. This area is a strong support as that is also where the 50 moving average sits. Okay, my personal opinion is Apple is currently at no man's land. For me, it's at a point where I think it's tough for me to add shares, while at the same time, whenever a big cap stock hits an all-time high, sellers tend to dry up and FOMO buyers keep stepping in and hence pushing the price higher and higher. That's what's happening to Apple as it hit all-time high time and time again in the last few weeks. So for me, I can only sit around and wait to add more shares, while my existing Apple shares in my portfolio continue to get greener and greener. Okay, let's now move on to Tesla. Tesla took a little break after it showed a few bearish signals and got rejected at near the red dotted downtrend line. Since then, it rebounded nicely and it is currently sitting above a support level of around 255. Come this week, Tesla could potentially test the downtrend line again at around 277 to 280 area. If we can get solid volume above this area, momentum traders and FOMO investors will step in to push the price to the $300 level, especially the latter. They wouldn't want to miss the run up to $300. $300 will serve as a psychological level for Tesla to break above, which may not be a strong resistance. Strong resistance should only come in at around 315, which was tested a few times in August and September 2022 before it plummeted to a low of 100. So yup, to summarize, watch out for 280, 300 and 315. On the downside, support is at 247, a level that Tesla broke below but managed to bounce up quite quickly. And can you see that gap there? The range is between 235 to 240. Alright, here's something to share with everyone. But before that, a quick one, if you like the content that I have been sharing for free, I hope you can support the channel by simply tapping on the like and subscribe buttons and also comment something below. This will help me out with the YouTube algorithm stuff. Other form of support includes signing up for a Weibo account using my referral link or buy me a cup of coffee at USD $3. Okay, back to the thing that I wanna share. Well, at one point, the gap you see here was actually between 235 and 244. Typically, though not always, gap gets filled all the way and then it will act as a support for the stock to bounce. But because the market was bullish and everyone was watching the same chart and gap as I do, I decided to step in for Tesla at 243 before the full gap gets filled at 235. And guess what? Tesla bounced up at 240 and it's at 260s now. Well, come this week, Tesla being Tesla, it could just pull back again and fill that gap at 235. That will make my entry price of 243 nothing to shout about. But well, if I am a trader, this jump from 243 to 263 is a good 20 points profit to take. But I'm not quite a trader in this sense. So yup, sharing this in case you are a trader who likes to buy low, sell high. This is how you can consider using my technical analysis as a reference, but of course not financial advice. Anyway, support should come in at around 229. I will be excited if this level gets breached because we would potentially hit back to 210s again, and that in my opinion is quite a good buying opportunity. Lastly, I am unsure what time this video will be released on Sunday, but keep a lookout for the delivery numbers for Tesla on Sunday, as that could set the trend for this week, especially it's a short week with lower volume expected. Okay, moving over to Google. In my last two videos, I talked about the Bollinger Band squeeze, and Google picked its direction as it fell from 126 to as low as 116. To be frank with you, on normal days, I would expect Google to fall even further, to say maybe the gap between 113 to 114. But seems like this bull market is too strong, and Google bounced off the dynamic support of 50 moving average at around 116 to 117. But before bulls get too excited, here's the interesting bit. Google reclaimed the important level of 120 for just one day, and then it closed below it in the next 2 days. Therefore, in my view, the trend has not turned bullish yet. It will turn bullish if it closes above 120 decisively with solid green candles. Then that's when we will potentially test 125 resistance level again. For a full-blown parabolic breakout, Google needs to punch through this stubborn resistance of 125, and that's when I think we can easily hit 130's range. On the other hand, if Google continues to get rejected at 120, we will very likely test the 50 moving average again. To the bears, 50 moving average is the hurdle you need to cross. Once crossed, I don't see a lot of support below. The gap is almost certainly to be filled if 50 moving average breaks. Strong support only coming in at around 108 to 109 area. Let's now talk about my option trades. I will be covering 3 trades this week. One that I just opened, one that I wrote, and one more that is expiring this week. So early last week, the market continued its pullback, but by the end of the week, many stocks have rebounded. That's bullish. As such, I decided to sell a cash secured put on Google on Friday, which is a slight bullish move. As mentioned earlier, Google has broken out of the Bollinger Band squeeze and headed downwards to as low as 116. But then it showed some strength by rebounding off the 50 moving average. The only thing that concerns me a little is that it didn't manage to close above 120. Otherwise, I would be more confident about this trade. Nevertheless, the trend for the broad market is bullish, so I decided to still make this trade. I wanted to choose a better strike price at around 108 or 109 level, as that is a strong support zone. But the premium wasn't great, and therefore I settled with 111 strike price. Next is this Google covered call. Yeah, as mentioned in my last video, I had to roll this contract. The image on the right looks like it's a positive trade. Well, not gonna lie, it's not what you see. Quick recap, I first sold a covered call with a strike price of 110, then Google flew up, so I rolled it up and out to 113, and now I rolled it again to 116. How long am I gonna roll this? I don't know, we shall see. But for each roll of the contract, I try to ensure that the overall net premium is positive and also enough to cover all the commission fees. So a quick one, here's the math. $240 minus 1,175 plus 1055 minus 640 and plus 660. That's net positive. Lastly, I have a cover call on Tesla that is expiring this week. The rationale behind this trade can be found in the video link at the top. Anyway, the strike price is $285. As long as Tesla doesn't rocket past $285 by Friday, I don't have to do anything and can keep the premium of $110. Not a lot, but I will take it anytime. And well, always be prepared for the worst. If Tesla moon to $300, I will roll this call just like how I roll Google's call. Simple as that. We'll update this trade again next week. Finally, a quick sharing of the profits that I made as a beginner from option trading during the first half of the year. It's about $2,400 which is around 3,200 Sing dollars. Hopefully I can keep this going, and that should earn me around $6,000 to $6,500 Sing dollars by the end of this year. May not be a lot compared to the big hitters and traders out there, but I do feel contented with this extra bonus or coffee money. Some end thoughts to conclude the first half of 2023. Whether you are convinced or not, we are in a bull market right now. Despite being cautious of the broader economy, I still believe in the commonly accepted definition of a bull market, which is when S&P 500 rallied 20% above its low. And as we all know, the market doesn't go up in one straight line, so there will be retracement here and there. Specifically in the bull market, pullbacks are usually short-lived. Though short-lived, they actually present good buying opportunities for investors, at least in my opinion, not financial advice. Personally, I have bought Google and Tesla shares at 118 and 243 respectively early last week during its latest pullback, and Google is now 119 while Tesla has rallied to 261. Will they come back down again? Well, possible, and that's when I will be looking at adding more shares. Likewise for other stocks, I believe we will have such buying opportunity again in the second half of the year. Speaking of later half of the year, you will be surprised that there are still many analysts who still do not believe in the current bull market and are calling for recession in the summer, or some are even saying recession has been postponed till next year. Personally, I see them as noises, but just to be clear, that doesn't mean I think they are wrong. They could still be right. My point here is, it is okay to be bearish and think the economy will collapse in 6 months' time, 1 year's time, but just don't use this opinion to trade or invest now. Look at what is presented in front of you instead of sitting around and wait for recession or collapse to come. I mean, what if it never comes? Right now, the fact is the market is going up. Hence, my strategy is to pick up shares when there are significant pullbacks, as shared earlier. In terms of trading, I will continue to sell cash secured put options, which is a slight bullish move, and continue to reap the premiums as much as I can until a recession comes, if it ever comes. So going back to the doom and gloom analysts who continue to call for a crash in the stock market, yes, they can be correct, but I will only react when their thesis starts to pan out. Say for instance, SPY drops below 420 again, or we see a 10 to 15% pullback in the major indices, etc. You know, something like this. Then I will be more careful and adjust my strategy accordingly. Lastly, as usual, I would always want to keep things in check with some words of caution. One thing to highlight is that Jerome Powell has been quite hawkish in his recent speeches and have warned that 2 more rate hikes are on the cards. But I know the stock market doesn't care right now because the US economy is still showing great strength. So here's the question for you. What if, just what if, inflation ticks up again, or the economy starts to crack a little as the interest rates remain high? I know it's hypothetical now, but well, just something for you to think through a little bit. And oh, before I forgot, technical wise, Nasdaq and some mega cap stocks are overextended again, and fear and greed index just went back up to extreme greed level. This actually increased the probability of another market pullback. But as to when and what is the extent of it, I don't know. Nobody truly knows. I only know I am standing by to pick up more shares. Okay, what about you? Have you bought any stocks this year? Let me know in the comment section below. Meanwhile, please also help out this channel by hitting the like and subscribe buttons, alright? Thank you.